Hey everyone, welcome back to the channel. Today we've got a big news that's stirring up the global markets, and yes, it's going to ripple into crypto as well. Donald Trump has officially extended the China tariffs for another 90 days. And you might be wondering, why is this important for crypto and why should you care? Well, stick around because by the end of this video, you'll see how this can shake up Bitcoin, Ethereum, and even your favorite tokens. And hey, remember to subscribe to CryptoNinjas for the best crypto content. First, let's break down the news itself. The 90-day tariff extension essentially means that the import taxes on Chinese goods, originally set years back, are staying in place for another 3 months. These tariffs were initially introduced as a way to pressure China in trade negotiations and have been a source of tension ever since. But now, the fact that Trump is extending them instead of removing them sends a very specific message to the market. It's a message that says the US is keeping economic pressure on China and that the trade war narrative is far from over. Now, let's talk about the why. On the surface, Trump's reasoning is America first, protecting US manufacturing and jobs. But behind the scenes, this is also a strategic play for leverage. China's economy has been slowing down in recent quarters, and the US knows this. Keeping tariffs in place squeezes China's export sector even harder. Plus, it creates negotiating power for future deals on trade, technology, and even currency policy. So, where does crypto come in? Historically, when trade tensions rise, traditional markets get nervous. Investors start looking for hedges against uncertainty. Gold is the classic choice, but in recent years, Bitcoin has been climbing the ranks as a digital hedge. If investors believe tariffs could slow global trade or hurt the economy, they might start allocating more into Bitcoin and other cryptocurrencies, especially now, when crypto is much more accessible than it was during the original trade war back in 2018. But here's the interesting part. Tariffs don't just affect sentiment. They can also impact actual crypto adoption. Think about it. If importing certain goods from China becomes more expensive, US businesses might turn to blockchain-based supply chain solutions to cut costs elsewhere. That could indirectly boost adoption of enterprise-focused crypto projects. And let's not forget, the Chinese crypto scene is still very much alive, despite restrictions. Tensions with the US could actually push Chinese innovators to focus more on crypto and blockchain as a way to build independent financial rails. And if you're looking for a solid Chinese crypto tokens, check out this video. Now, here's where it gets spicy. Whenever there's a big geopolitical move, big money looks for volatility to profit from. That means traders might start speculating more aggressively on Bitcoin, Ethereum, and even altcoins. We could see short-term spikes in volume and price swings as the market reacts to any hint of escalation. If Trump makes additional trade announcements, or if China responds with countermeasures, expect the crypto market to react almost instantly. On the flip side, there's a risk factor here. If tariffs cause too much uncertainty in global markets and stocks start tanking, crypto could also see a sell-off. We saw this during the early COVID crash when everything sold off together before crypto bounced back stronger. So, while Bitcoin might be a hedge in the long run, in the short term, it's still tied to overall investor sentiment. All right, so what does this mean for you as an investor? Number one, keep an eye on news from both the US and China over the next 90 days. Any escalation could create short-term opportunities. Number two, consider how tariffs might influence the narrative around Bitcoin as digital gold. If tensions continue, that narrative could get a big boost, which historically has been bullish for BTC price. Start accumulating. And number three, watch for indirect plays like supply chain blockchain projects that could benefit from companies looking to offset increased trade costs. In conclusion, this 90-day extension isn't just a trade policy decision, it's a signal. It's a reminder that geopolitics and crypto are more connected than most people realize. And it's proof that your crypto portfolio is influenced by much more than just blockchain news. So, what do you think? Will Trump's tariff extension push more money into Bitcoin? Or will it spook markets and cause a dip? Drop your thoughts in the comments. And as always, make sure you're subscribed so you don't miss the next breakdown.